Good morning, traders. Welcome to the Flow Show, Wednesday, 24th of September, and a quietish morning. We've got a few moves happening at the moment. A couple of pairs on the break that we'll take a look at. Just keep an eye on dollar yen, up testing that 148.30 area. Anyway, we'll get into that a bit later. Morning, Kate.
Morning, Ryan. Morning, everybody. Yep. Bit of moves unfolding right now. Yen's still very weak. I hope you're doing all right.
Yep, all good here. All good here. Right, Japan is where we'll start for the moment. PM contender Koizumi, and lots of these folks coming out with their party pledges, vote-winning pledges. Says he will aim for a 1 million yen wage rise based on the Bank of Japan's 2% price goal. I'll leave someone else to do the maths on that. Kobayashi thinks that defence spending is insufficient at 2% of GDP, so he's likely to want to get that higher. Takeichi says higher rates could affect corporate investment and household mortgages. No shit, Sherlock. It says the government is responsible to set the direction of fiscal and monetary policy, but that the Bank of Japan decides on the means for monetary policy. Is that an indication, Kay, that they or she may want some changes at the BOJ?
Yeah, but in what sense, really, is she going to push for those changes? Yeah, and I could be right. I'm not sure that she's going to be wanting to intervene too much in the BOJ unless she wants Kuroda back.
That'd be a shocker.
Hmm?
Yeah, that'd be a bit of a shocker. I mean, we can't take much just from a few throw out comments. But she's stepping on a few lines with those comments, though. Anyway, Japan's finance ministry has apparently proposed cutting its issuance of long-dated JGBs to 250 billion from 350 billion for its liquidity enhancement auctions. So a bit of tightening up going on there in terms of that. We finally got to know who's stepping in at the RBNZ. It's not going to be Sarah Breeden at the BOE. It's going to be Anna Bremen of the Riksbank. Deputy Governor there is going to leave the Riksbank on October the 10th and will look to be in place around about December the 1st. Governor Dudley didn't get the job, so all change there, but that's going to be over the months ahead. Australia got a bit of a shot in the arm from inflation. Inflation ticking up in their weighted mean number there up to 3% from 2.8% previously. Also saw one of the other measures, their trimmed mean, that dipped back a bit to 2.6 from 2.7, but that main headline number doing the damage there. Seeing the Aussie jumping, putting me out my misery and my Aussie Kiwi shorts. That was a dead man walking for quite a long time, but that's given the Aussie a boost and pushes the RBA further away from another cut. Their meeting is next week, so low expectations for any action there. Bank of England's Peel says we need or may need to maintain restrictive monetary policy. Inflation has proved more stubborn than expected. Domestic inflation is falling at quite a slow pace. It says budget tax changes had a direct impact on inflation. A little bit of a warning there, seeing as we've got another budget coming up in a couple of months. It says inactivity, Brexit. Yes, we're still blaming Brexit. And immigration changes could allow for larger markups on wages, which might support inflation. Says we're moving towards a more repo-led system. Just before I move on, I missed the PMIs from Japan and a little bit of inflation data there as well. Manufacturing PMI Going backwards, 48.4, like we've seen in quite a few countries. Services, just a marginal change, 53.0 from 53.1 prior. And Bank of Japan core CPI measure there coming in unchanged, 2%, was expected to pull back a pip. We've had the OECD's chief economist, who's also going to be coming in as ECB member and head of the Bank of Portugal, Mr. Peartree, Mr. Pereira, says more needs to be done to stimulate European growth. We've had it's a day for food central bankers. ECB's Cipollone, aka the Big Onion, says we're ready to react as needed in any direction. Germany's Chancellor Merz says German business leaders are deeply worried about the future and we are facing the most challenging times in recent history. That was borne out in the IFO a little bit after that, where all three components came in lower than last month and missing expectations, all of them looking for a little bit of a rise in those expectations. So we're still in the mire there in terms of seeing things picking up in Germany. Yesterday, not a lot of data out the US. We got the Philly Fed numbers or services numbers, never on most calendars, but that came in a little bit less crappy at minus 12.3 versus minus 17.5 previously. New orders, though, were pretty much flat, 0.5 versus 21.5. Employment, though, that rose to 9.4 from a minus 3.8. And on the prices front, prices paid came in softer, 38.8 versus 43.2. Prices received, though, went up a touch, 21.8 versus 20.1. Wages and other benefits pulled back to 28.7 from 37.9. And there was a bit of a similar theme in the S&P Global manufacturing numbers that we got as well. Manufacturing, that held, it was expected to pull back to 52.2, went a bit worse, but only a big point lower. Services, again, a little bit of a minor miss of expectations and confirming lower, but certainly not to the magnitude we saw in some of the other PMIs. Within the details of that, tariffs are still a factor in input prices, i.e. inflation, but the difference now is that firms are remaining reluctant to pass those costs on. So that's going to become a bit of a margin squeeze, a profit margin squeeze there. Employment, though, was up for the 7th straight month. So that was good news for the Fed as well. So they got two bits of good news: lower price pressures, higher employment, although those lower price pressures coming from a potential profit margin sting is not going to be sort of good for them perhaps later if that continues, because if firms are making less profits, maybe they need to cut costs, and that's when you start seeing unemployment ticking up. So it's still a bit of a balancing act going on there. Feds Goolsbee says we have a low hiring, low layoff market. Neutral is below where we are now by 100 to 125 basis points. We need to be a bit careful about getting aggressive, though. Says right now, I'm not thinking about 50 pip cuts. The supply side of labour is moving all around with immigration. We got one of the what was going to be a suspected dissenter, Fed Bowman, said she supported a quarter-point cut, but it's important the Fed is now proactively supporting the jobs market. But she is worried the Fed is behind the curve on labour market weakness, but not enough to call for a bigger cut, it seems. Policy may need to adjust faster if risks materialise. It's important that the statement included a forward-looking view for further cuts. Expects last week's cut to be a first step towards a more neutral rate if the economy evolves as expected. Then she also said that an inflation target range works well for other central banks. This is a growing discussion amongst Fed heads and other commentators over how the Fed may change its mandate or its processes for inflation as part of monetary policy. Fed's Bostic touched on it as well, saying he would be open to using an inflation target range and could support a 1.75 to 2.25 inflation range at some point down the road. And that sounds pretty tight, 50 basis points between 175 and 225, whether they look to change or go wider. For example, the Bank of Canada has a 1 to 3% target range for inflation, a bit wider. Some other banks have the same as well. Powell was out, pretty much chapter and verse from what we got at the FOMC. Something we were discussing previously. There hadn't been any massive market moves or jitters after the FOMC, so he didn't need to come out and do any smoothing, and that he didn't. He did say that the Beige Book showed modest growth. The economy is growing, but not fast, and that the Beige Book is not showing significant regional differences. This Beige Book used to be one of the main data points of the month, because it is a survey of all the Fed's regional heads and offices and whatnot, giving an overview of the economy. But now we get things like PMIs and much more up-to-date, smaller data. It's sort of fallen by the wayside. Kay, could the Beige Book be big again?
Bring back the Beige Book, BBB, it's back to the good old days. You know what? I mean, it's not completely, it's not irrelevant anymore. I would say it is relevant, the Beige Book, because as we go further and we know about all these trade stuff and tariffs, and it's interesting to know where the local economies are, and they could impact other data as well. Okay, as you say, it's been pushed back because of other indicators. But it's not irrelevant. I think we should at least keep an eye on it, and not dismiss it as just being irrelevant.
Absolutely, and I'm just looking to see. We have picked it up when there's been marginal or been some news within it, or not news. I'm just trying to look.
It hasn't really shown big moves of late, but as with everything, we've been talking about that as well. I mean, further down the line, once we know everything about the tariffs and everything about trade relationship and etc., these data will get relevant again. And I think we may be just getting there, and that we need to pay a bit more attention to it. They have not shown huge variations though over the past months.
Yeah, the last time we mentioned it on here was the 24th of April. I'll just check back over all my notes that I keep for these shows. So, yeah, it's not really told us anything new. We'll still pick up the headlines now and again, but if there's any big changes, we'll bring them to you. But say it's not done an awful lot recently. As Powell said, it showed modest growth. The economy is growing, but not fast. So that's not exactly new news. Anyway, moving on, we've had Trump talking about the potential shutdown, and it looks like everyone's back to chest beating and tub thumping. He says, after reviewing the details of the unserious and ridiculous demands being made by the minority radical left Democrats in return for their votes to keep our thriving country open, I have decided that no meeting with their congressional leaders could possibly be productive. So we're at loggerheads over that. The clock is ticking once again. Trump was also at the UN, and what a popcorn show that was. He was moaning about broken escalators and broken teleprompters and everything else in between. But he did have a few choice words for the UN. He really dug them out about their lack of bite, pretty much saying that all talk, no action, saying that empty words do not solve wars, which some might say he does have a point. He also got a bit bolshy in some comments afterwards, saying NATO countries should shoot down Russia aircrafts if they enter NATO airspace. asked if the US would support such shooting downs. He said it depends on the circumstances. Says we will know about Putin in a month. Don't know what that means or what's coming from that. Then he got on his Truth Social, chucking a few negative comments at Putin, saying they've been fighting aimlessly for 3 years in what should have taken a real military power less than a week to win. Then went on a bit of a waffle, ending with, I wish both countries well. We will continue to supply weapons to NATO for NATO to do what they want with them. Good luck to all. Which sounded like a bit of a washing his hands of the situation. Whether that's true or not, I don't know. But it doesn't seem, based on that tweet, that he's ready to get his hands dirty in getting in the middle of those two, Putin and Zelensky, again. Kay, do you think do you think he's walking away or just throwing a strop?
He has been saying that he will supply whatever NATO wants, and then NATO does with it what they want. He repeated that yesterday. Washing their hands. You can understand it in different ways, and understanding the Trump language is not always. We don't always know what's really playing in his head, but. Because I kind of understood as well about these texts that he can't really do much about it right now. But he's clearly pushing NATO to get their hands dirtier. That is what I think the clear side of the message there. But of what he's been saying there and before, I don't think that the US really wants to get involved anymore directly. But he did leave the door open for some what is it other support, yeah, like what is it? Not spying, but I'm searching for the word.
Security.
Yeah, different kind of support, right? Just intelligence and surveillance. That's what the word that I was looking for. But further than that, I don't think that the US is going to go anymore in this conflict right now.
Yeah, and that puts the ball firmly in Europe's court, which as they've done fuck all for the last 3.5 years. Don't think anything's going to change there, but. Yeah, I don't know what happens with it. I mean, he inserted himself into the situation, having a meeting with Putin, saying that all went jolly well. They were all backpacking after that meeting. He gave him a deadline. Nothing happened. Now he's saying that Putin's disappointed him and, maybe the relationship's changed. But rather than push back, sounds like he's sort of half walking away from it. But you never know with Trump. He could do something stupid today. But anyway, that's where we're at. It's still a situation that something is going to have to happen sooner rather than later. Either Ukraine's going to get all its territory that Putin wants taken over, or they're going to push back, or Europe's going to have to stand up and start pushing back against Putin and all these little games. Anyway, the Kremlin was speaking about the nuclear treaty, which is set to expire, saying that time is short and allowing that treaty to expire would be fraught with risks for international security. If the US does not agree to extend the treaty limits for a year, measures will have to be taken. It's not clear yet when Putin and Trump will speak again. That's all on headline front. Unless you've got anything else, Kay?
Nothing market moving, Ryan. No, I think we've talked about whatever we needed to talk about. Interesting on the RBNZ that they went to get that Riksbank lady. Yeah? They were. It seems they interviewed or they scanned more than 100 candidates for the RBNZ. I mean, where Bassett only speaks to 11.
Yeah.
It was quite interesting that number. I would have said they want to not to make any mistakes there. For the rest, we've covered everything, Ryan.
Yeah, yeah. No, and I've been reading some of the press. They were potentially looking at Catherine Mann at the beer as well. Ex-RBA guy, De Bell as well. So they're really going through the list of.
At least Indra didn't get it.
Yeah, well, they can have her. I think they were looking a bit like a cheap football team looking for free transfers. But anyway, they've got their woman from the Riksbank. Well, they will have when she goes in, and everyone can get on with their lives. Right, what have we got coming up today? Not an awful lot, really. We got bit of housing data, well, permits revision, and we got the NBA stuff dropping as well. New home sales in the US a little bit later as well. Some Mexican CPI data ahead of Banxico meeting. And that's really about it on the data front. So not a lot to get our teeth stuck into. Bit of a quieter week this week. And we're seeing that in markets generally. Yesterday was a very dull day for a lot of pairs. Things like cable hardly budging. A lot of frustration being felt in the chat room. But this is what markets are going to be like after all the volatility last week. A bit more calmer. Need to see some data points to get things moving. But we are seeing a few movements. As I mentioned, dollar yen, we're up, nudging this line that we've poked a few times over the last week or so. We're up again, a bit of a bounce after a dip yesterday. Got down to 147.50. This is really doing nothing. But one thing this is showing is that we've seen a very drawn out period of consolidation, probably the longest bit of tight sideways action we've seen for quite some time. Maybe going back to sort of this area, 22s, 21s, where we just, stay in a very tight position. We haven't seen a lot of that for quite some time. So this is, again, the market maybe just calming down a bit. We know what's coming from the Fed. Rates are, coming to the end of their cycles of cuts. Not at the end, but, we're only talking, 100 basis points here, 120 basis points there. We're not talking about big, huge moves in rates now. And if central banks get the perfect world where rates come down and settle for a while, unfortunately, that's not going to be good for volatility. And we could be going back to the days when volatility and things like euro, even cable, we're down at the 4%, and we're struggling to get moves. Okay, I'm not trying to give it the kiss of death, but we had this in 2018, 2017, 2018 when we came out of all the banking crisis. Years later, things calmed down, volatility dropped off a cliff. It's good. That's what central banks would want, not what we want as traders. But we're a ways to go from that yet. But the signs are there, and dollar yen is one of those ones that is showing that. So, Kay, I don't know what's going to break this one out. It's either going to be a massive turn in the data or shock out of Japan in terms of politics or the Bank of Japan. But we're going to be light of shocks, maybe.
The thing is, every time. But I was looking at it this morning. We spoke about it in the chat room as well. I said it looks breaky to go for a little bit of a walk topside, but then every time it looks like it, the dollar manages to lose a bit of steam. But you look on the side of things, those yen crosses are still very big, and I have the suspicion that that just may continue until we get the result of the LDP election, and then we will know, obviously, a bit more. Takaichi is probably going to be a continuation then of a weaker yen for a while. Konizumi, a bit more of a question mark. I know. And it's a bit with all those dollars, right? We've seen it on the euro. Euro comes in bid, then all of a sudden it stops. Then we get a 50 points decline, and then all of a sudden we're holding supports again, and then we're back in the middle of it. the other thing which we have also touched upon, and you also have posted in our newsroom as well, is that it on the one hand directional options, but I think there's too much short-term options in play in this market, and they keep it all in ranges. Every time we see a big data point or an event coming up, we see very subdued expectations on the options market. Yes, you have a bit of a spike in volatility, which is absolutely normal, the expected volatility. But if you look at what the expected ranges are on the back of it, they are not very ecstatic. And as a matter of fact, apart from one or two exceptions, those option traders have been right, and they have been capping and supporting ranges on either side of the expected move. So I think we are in a bit of a period where we are going to look for again what's next. And but we've already been commenting about it. You see those data that we get out. They are not shocking either, right? In either direction. Apart from maybe those big revisions on the jobs reports, we got all those PMIs out, but then you have like a bit of a mixed picture. The manufacturing being a bit lower, but then the services higher, or the opposite, and vice versa, and all of that creates even more range trading. There are a bit moves, but the moves as such are uh, translate them into percentage and trend wise, they're very shallow, right?
Yeah, exactly. And yeah, as I said, history shows us that when rates calm down, the market calms down, and
Absolutely.
yeah, we can start to struggle for volatility. But it just means you've got to adjust your trading to the conditions, and if that means keeping
And
things
prepare
tighter, playing tighter ranges, that's what we have to do.
and prepare. I mean,
Yeah.
periods of calm are always a good time to prepare for what is possibly to come next, you know.
Yeah, because if we've learnt something over the last 10 years, there's always a shit show just around the corner. Whether it's a pandemic, I mean, we haven't had aliens landing in the last 10 years, so that's probably going to be the next one that gets us moving.
I guess they
You heard it
sabotaged
here first.
they I think they are not farm-made, because I guess they are the ones who sabotaged the elevator yesterday.
Yeah, and the teleprompter. Yeah,
Yeah.
well, that's one added to, well, at least two people added to the unemployment list in UNHQ, probably. Yeah, anyway, let's crack on. Well, while we're on the euro, well, I don't know why we're on the euro. It's not doing anything, as Kay mentioned. We're still holding this 1750, which is probably your closest key level, irrespective of what waffling we're doing around here. We haven't looked like we want to go up and challenge these highs. Moves above 118, fleeting again. We can't hold above there. So this is where you just really got to look at things. If you're going to be trading in the very short term, you look at where the bigger levels might do something, and then you can look at where things fail to happen. So if you're going long and you can't get through that 108s, the 118s, you know what to do. You know to take some money off the table, tighten your stops up in case it doesn't break, and give it back. And the same thing's happening in a lot of pairs. I'm going to look at that dollar Kiwi because that's absolute rockets again at the moment. I'm stopped a pip and point two off of the highs, so that's probably going to be the highs for the next 50 years. Traders' luck, but yeah, the breakthrough this area, this 112.80s and into 113s, that's enough for me. No need to keep flogging that dead horse. It does open the door for a move up to this area here, which is a big fib level. Oh, I've got to go into the weeklies. Big fib level that we had a little break of before. We've had a little break previously as well, back in 2015, but couldn't hold that move. So yes, it's a bit of a level on its own, this 114.50, and against these prior highs as well, and we could be heading up there. This really looks like no no signs of turning for this one. I know Mark in our room's ridden this one like a true champion, so well done to him. But yeah, we could be having a look up at the top of that range there. I might have another little nibble, but it'll just be a tight one against that area up there. But no signs that this is turning as of yet. And with the RBNZ maybe turning more dovish, and that CPI data keeping the RBA standing pat. There is no signals here as to why this should turn around and start heading lower. Last one we're going to look at, dollar CAD, which is on my big level here. We're having another go. We've been walking up and down, up and down, up and down here. We're now having another go at this level. If we hold this break, we're on for 139s, I should think, at the very least, and maybe even finally taking a crack at the 140 level. We've still got plenty in the way, but this is the big area up here. It was a very, very good support point on the way down, 140s. Very decent bounce. Then it was a big break, and then it held that break. So this is going to be the key level up here. There's a bit of traffic in the way as well. I've got another decent level, 139. What's that? 139.80-ish, 78.80. And then that 38.2 right close to that 140 area, going to be a big psychological level. But early days yet, but it is looking like it wants to have a little wander up. So it's keeping this uptrend going, taking its time, but technically it's doing what it needs to do, at least on a support basis. So yeah, a little bit of a slice off, bit of a partials at 55 just coming into this level. I'm going to run the rest and see where we go from here. I might even add if this level starts to hold on a break, which it's doing at the moment. Right, okay, I'm going to hand it over to you, sir.
Okie dokie. Did you see the Q&A there, Ryan? Have a look.
Yeah, I'm just looking. Yeah, I'm just having a look at that.
Yeah. Somebody seems to have a bit of an issue with your charts viewing. I don't, by the way, have this issue. I think they're very clear, but we're on a PC, obviously, so maybe not on the phone. Ali saying all is okay. Ali, I see your short Aussie. Is that a wrong big figure that you put on there? Because you say you're short at 66.89, but then want to take profit at 66.59.49. I guess it's 65. You mean? I'm still the other side, mate. I think Aussie has still some to go for it. That's what I think for now. I'm not excluding that we are going to have a move back down here before the week is over, because we are now gradually getting into this end of month, end of quarter stuff. There may be some dollars to be bought. I'm not excluding that we get back down here, but then I'm just going to add to my existing. It is a fact that we are not holding above 66 and a quarter right now. Ideally, it should go above 66.40 and then continue to push higher, but it may be stuff for next week. I think we need to be a bit patient right now. But the overarching theme that I think that is still valid is that Aussie, globally speaking, is still one of the ones that are doing better, and we see it when we look at Aussie crosses globally. Well, Ryan already mentioned Aussie Kiwi, for instance, but even if you look at Aussie Yen, for instance, if you look at sterling versus Aussie, etc., we see that Aussie is actually doing relatively well, and that helps obviously to support the Aussie dollar as well, where the dollar is maybe a little less clear, as we see on other pairs. The dollar is not extremely offered, right? But it's one of those currencies that I think will continue to do well. And then obviously Aussie Kiwi is continuing to rally, but even the Kiwi dollar is really on the other side of the spectrum. It can't get off to trade higher. It can't get off the mat. It just can't rally for now. And I think that's a bit of an issue. And the issue lies here for a starter at 58.75. Of course, we can add 59 the figure, but it's already here at 58.75, around there. Call it 75.80. See here, see there, and then here we hesitated around there. We hesitated around there again, and here we can't even get up there. So if the dollar continues to get to trade a bit better, perhaps into the end of the week, who knows? This Kiwi is still going to be a candidate to go for a retest of 58 the figure, and then there we will need to make a bit of a decision, or it's going to have to make a decision, this one, because it is the prior low, and it is also a decent fib action, which is the 50% of this move higher. I know 50 is not a fib number, but it is halfway of this move higher, and it wouldn't look too good if the Kiwi starts to move under there. So I think Kiwi is still completely is still on the other side of the spectrum of currencies that are strong or weaker. One that is still a bit weakish right now is also the cable. We have seen, although euro sterling stopped again just before that 87.5, it's not really holding recovery rallies. It's really going to have to take this 135.40 to continue to push. For as long as that doesn't happen, we are at risk of retesting at least this low or this line here, 60.50. And why not, if the dollar would strengthen a bit more, why not get a move back down to closer to where the bigger support comes in, you know? Yeah, we had this spike below, but really it has been a zone that has traded very often in the past. So I still think that the 133.65, 133.90 is going to be very important if cable ever gets down there, okay? Again, I think it may be something that happens into the potentially into the end of this week, and then early next week for quarter end, looking at the divergence between a lot of the equity markets, especially the US ones, who have really, together with still the Nikkei, overpowered all the rest. It may be that we find support there. We will have to watch the clock, especially on Friday, support there, and then start to push higher again into the month end. But still some time to go. I just want to show, and I wanted to show this one of those yen pairs that has really been pushing on, and also showing still bit. There's some really decent level here. It was a high here as well, and a low back there, which is the 97.30s up to 97.60, 65. Prior high, went above, came back below, but we are above again. It feels like this Aussie yen is one of those that may continue to push a bit higher. That is how I look at it anyway right now. For as long as this zone here, perhaps I should have added a bit of a line there as well. And it's a daily. It's not really a very short term one. Those are potentially decent levels that have given way, you know. And the retest, and then going up again. This is one still candidate for me, unless we break back below 97.30 or something, is still a candidate for pushing a bit higher. What else are you guys looking at? Angela, thank you. But I do agree with Ryan on the Canadian dollar side, though. If you look at it, the comparison between the mix and the Canada, for instance, Canada is still weaker, and I think for some good reason, because of the data and nature of Maclem being a bit of a softy one as well. Gold may be forming a bit of a bullish flag here. Maybe it seems to take a breather. We are coming back from those highs. In that case, watch what's going on. Just under 37.5 down to 37.40, potentially that prior the extension level here in the 3730s that I was watching, it could be that we are in the process of retracing somewhat. Okay, if I look at the rest of the dollars, um, although we know that gold and silver can move on their own, but yesterday has been a more quiet period in the US. Overnight, the Asia market, we haven't seen too many buyers. We have stayed in the last range. We haven't pushed through. So there is a potential that we are now entering a bit of a more consolidative period. I've really reduced the longs that I have from under 37. Really reduce those right now, and I have put a protection stop just below this level here on the day, just in case we would get deeper corrections there. But a bit of a breather. Same thing happens on the silver. Try higher here as well to stay above this 44.20. Couldn't. It's still above 44, so I mean it's holding a bit better than gold, but allow I would say for a bit of a consolidation as well, perhaps down to 43 and a half, for instance. That is something that is all within the cards. But obviously, if we continue to push higher, we are going to have to look at the one that I've been showing already a good number of times. There's first of all, this is that 44.20 that people are looking at as well. It is the August 11 spike, but mainly for me is the 88 and a half, and it could just be, after this long run of really long run higher, we take a breather going into that level. Okay. um Nikkei, do you feel appeal to look at the Nikkei, Ryan, a bit later?
Nope.
No. Okay, then I'll take it up. Yeah, I'm actually started to look at this the Norway as well, because I've got a bit of an interest in Norwegian kroner. I think Norwegian kroner sooner or later should be doing whoops, is it not? Should be doing a bit better again, perhaps into the where is it? Shall we look at the Nikkei futures? Yeah. Okay, Nikkei. What do you want to do with it, Gonzalo? Just one thing here. Up. Just a quick one. 44 and a half, 44.55, 555, 44.555. That's where I think there should be support. Stretch it to 44.355. But for as long as it doesn't get below there, we don't expect too much deeper corrections. If Takahashi gets it, just a simple thing. If Takahashi would get it, okay, there's no reason for this to go lower, because she will be a spender, and it should be good for anything up there as well. We know that the Bank of Japan is going to reduce ETFs. By the way, Japan reducing ETFs and J rates, they should have more impact on the topics than on Nikkei somewhere, okay? Also because the topics is a bit of a more niche kind of market, players-wise. But we also know, as Ryan has been informing us, that it's going to take them an enormously long time to get rid of everything. So I don't think it's going to have a big weight on the Nikkei. I think this is somewhere where they announced it, but it's not really it hasn't really impacted anything for any length of time. So I don't think we need to take that one into account. But just keep an eye on who gets the election, because if it's Takahashi, I don't know where this is going to stop. It's probably going to go up to 50K relatively rapidly. But look at it. You're looking basically at a market that has now uh, taken it that whatever happens in Japan, first of all, the Bank of Japan is not going to raise rates rapidly. Whoever's going to get it in the LDP race is probably not going to stop spending. And if it's Takahashi, I wouldn't really stand in front of it. You can trade it from the really short term if you want to stand in front, but if it goes back above 45, that top here, 45,800, you've got to get out if you want to counter it. I don't see anything negative in there right now. And pop. I think that's it for today. No, we've covered everything that you guys. The Euro Swiss, still no comment, mate. I mean, every time I look at it, it's trading 93.5, 93.30, 90 somewhere there. Just watch what's going on into month end. Okay, month end, quarter end. We have seen over the past that there has been a lot of Swiss activity. Okay, most of the time it's been on the buying of the Swiss side. So if you're short Euro Swiss, perhaps you could have a bit of joy there. But I mean, fundamentally speaking, I can't agree with this move, with the Swiss being so strong. But it's let's see what happens once the month is over. But for the time being, I've got absolutely zero interest in trading Swiss franc right here and now. Ryan, back over to you, mate.
Thanks, mate. Did you look at Aussie CAD?
Oh, no, I didn't.
No?
I haven't
Okay.
seen the request.
No, I'll take it quickly because it is quite an interesting picture. I think we talked about this with someone earlier this
Yeah,
year
indeed.
when we were below this 90s area, 1940s. We've had a decent break above it, but it can't get above the next hurdle, 92s. So that's your short-term range to look to play into. But what's interesting is the moving average picture. We've got a ton down here, 89s to 90s on the daily. On the weekly, we've got an absolute clutch down here, same area, 89s, high 89s into 90s. So technically, there's a lot of big moving average confluence down there if you get a dip below this level. I don't know what you're doing, Liz. Let us know. And just a quick look on the monthly as well. We seem to like that 100 monthly moving average and the 200 behind it as well. So just keep an eye on that if you're looking more long term for that. Anyway, that's my eyeballs on that. We can talk about it in more detail another time. Right, that's it from the Flow Show. The only last thing I just want to point out is the sale we've got going on. I'll chuck the link in the chat as always. Don't forget, take advantage. This is only on for another few days. Use those codes there, full 30, new 50, where you can get 30 or 50% off, depending what category you want and fall into. Thank you, everybody. Have a great day. We'll see you all tomorrow.